Well, good afternoon, everyone. It's just after 20 past 3 here on Tuesday, March the 2nd, and looking at VectorVest USA and the American market running for, nearly an hour. So, after the up and down of last week, where I got stopped out of quite a few positions, we had a cracking big up day yesterday, and the trading, for the first hour, the short-term trend on VectorVest has turned up. Just remember that in fact could change before the end of the day. So a little bit of a pullback today, but the Dow has managed to get its head into positive territory. It was there a second ago, bouncing around -8, -5 points. So I want to focus on the American market today because that certainly is driving and certainly driving what's happening in the UK. The short-term trend has turned to up, the underlying trend is up, and we've got a confirmed up in place. So I think I've got the VectorVest market timing chart running, and that's the VectorVest Composite, which is an equally weighted measure of all of the shares that we follow in the US, a very, very broad measure of the US market. And that's the data over the last 3 months, and this is the volatility we saw last week. As you can see, there's some very important levels on here, and quite easy to see is this former resistance, which became support here, and market came down and took out those lows and then reversed very strongly yesterday. That's what Richard Wyckoff would have in fact referred to as a Wyckoff spring. So that was quite a positive move up. The other thing, of course, for those of you that are fib analysts, is that if we go from a fib from here to that high, the last daily range, the low on Friday was exactly 62% of that, and that's a confluence between the old high, that resistance becoming support, and the fib level. That's always a very important place to look for. So the orders certainly in the latter half of Friday sitting right down at the Fibonacci level. So what else we got in this chart? Well, down below we have got the buy-sell ratio. I'll take the fib off for a second to make the chart clearer. And this is the number of shares that VectorVest have placed on the buy recommendation divided by the number of shares on the sell recommendation. It's a very interesting chart. This is the run-up from the October low. And as you can see, as it was running up, the breadth of the market increased significantly. What I do see now is quite positive, because this made a rising top, and the buy-sell ratio also made a rising top. And invariably, that means more strength. Now, this market has pulled back, and it's still got a little bit of work to do to break out of this pattern, and on the buy-sell ratio, the buy-sell ratio already starting to turn up. It's turning up, and if you understand and done a bit of my work over the while, it's actually showing a reverse divergence pattern where the price is rising and the indicator is falling. That's a very bullish pattern, folks. So I remain reasonably bullish on this market. Certainly the bond market got into a bit of a tiz last week. They seem to feel that the 1.9 trillion is going to cause a great deal of inflation, and clearly inflation infers interest rates rising to counteract that inflation, and that's not good for stocks, and that's what hit us last week. That angst that we saw in markets, massive down days, massive up days, was caused by that. This chart technically looks very positive indeed, although I haven't really done that much. As I say, I got stopped out of a few positions at a small profit last week, and I got stopped out of Neo and Peloton at a loss. So that's just the way it is. It's happened to me 1,000 times before. So I remain quite positive about this market, but nevertheless I doubt if this angst has gone away. So just watch and be careful out there, as they say. So if we have a look at what I've done, I bought into Micron yesterday, I bought into PayPal, I bought into DraftKings, and the levels. Micron MU at 93, DraftKings at 65, PayPal at 68. So as you can see there, 68 on, that's rubbish, PayPal 268, sorry, read that incorrectly. So Micron 93, PayPal 268, and DraftKings at 65. So there's a little bit of profit there. They've all pulled back a little bit. First day of the month, you tend to get quite a lot of strong buying. As you can see, as we speak, the S&P has come off 20 points, pull back from yesterday. The gold market, I've called copper reasonably well and commodities reasonably well over the last 6 months, and we've made good profits in those, I hope. I hope you have as well. The gold market I haven't called as well, and the gold market would seem to be finding a bottom. I thought it had made a bottom last week. I thought it was going to bottom out just here last week. I was wrong, and I don't think that it's going to find any support until it gets down to this confluence of this 62% retracement and this old high. So I would be surprised if the next target wasn't about 1690 in gold. I'm still holding on to polymetal. I got out of Pan-African Resources. I'm still holding a small position in polymetal. There is also a channel bottom at about the same level, so let's see if this level can hold. Certainly gold has been very disappointing, and I'll repeat, folks, that if you want a quiet life, you leave gold shares well alone. However, these huge moves up become very addictive. Maybe I should try and give them up, I don't know, but become quite addicted to these big moves up. In the UK, I really haven't done anything at all since I've last made one of these videos. I got out of Pan-African Resources, I got out of Team 17, and I closed most of the position in CCC, which had hit its stop loss. Still got a small bit of it left, and everything else I'm holding in the UK. So if we go back to the front page of VectorVest US, as you can see, the short-term trend is still up. The number of declines higher than the number of advances. I'm hoping that this pullback that we've just seen in the US market, if I go to my viewer screen, I put up the S&P. I think that's the S&P itself, and S&P has pulled back a little bit after that huge day up yesterday. As you can see on the S&P, the low of Friday was exactly that 62% retracement as well, which was also the 55 exponentially smooth moving average. I remain bullish, and if so, I shall be adding to those positions and that I got into yesterday. I hope you found this useful. I think that we have to be very careful, and I think that you must remember that as a short-term trader, if you class yourself as a short-term trader, you are a risk taker, and that means that you need to accept the risk. And if you want to read about that, I think that get yourself a copy of Trading in the Zone by Mark Douglas, and he talks all about how to get mentally strong so that you actually accept the risk. He makes the point that many traders feel that they are risk takers, but they're in fact not risk takers at all because they haven't accepted the risk. So just remember, it is risk and reward. We're risking £1 to hopefully make £2 and get that right 60% of the time. And that means when you're right, 6 times 2 is 12, and 4 times 1 is 4, so you actually end up making money over 10 trades. But it is risk and reward, and as risk takers, we have to accept the risk. Mark Douglas explains that much better than I can. Thanks very much. Bye bye.